John Bogle's profound impact on the American finance landscape is unparalleled, making him a visionary figure who not only shaped the course of economic history, but left an indelible mark on the way individuals approach investing. As the founder of Vanguard and the pioneer of the index fund revolution, Bogle played a pivotal role in democratizing investing, challenging the traditional norms that seem to widen the financial divide between the wealthy and the common investor. Delving into the exploration of his life reveals a journey that transcends financial success. It's a narrative of resilience, innovation, and an unwavering commitment to leveling the playing field for ordinary investors. Bogle's early life, set against the backdrop of the Great Depression, was marked by economic hardships that forced his family to confront financial instability. These early experiences sowed the seeds of a strong work ethic and a determination to rise above circumstances. Recognizing the transformative power of education, Bogle devoted himself to his studies, emerging as a standout student at Blair Academy and earning a full scholarship to Princeton University, one of the nation's most prestigious institutions. Bogle's transition from Princeton to the Wellington Management Company marked the beginning of an illustrious career in the mutual fund industry. Armed with a remarkable thesis on mutual funds, he joined Wellington as an assistant to the founder, Walter Morgan. Despite the initial modest scope of his position, Bogle's intelligence, work ethic, and keen understanding of the mutual fund market quickly set him apart. The late 1950s and early 1960s witnessed significant transformations in the finance world, with the bull market in full swing and mutual funds evolving rapidly. Bogle's innovative approach led to the creation of the Wellington Equity Fund, a departure from the company's traditionally conservative investment strategy. This bold move paid off, establishing Bogle as a rising star and eventually leading to his appointment as the CEO of Wellington at the age of 35. Bogle's tenure at Wellington was not without challenges. The dynamic nature of the finance world, coupled with economic uncertainties, prompted him to propose a merger with iVest, a more aggressive fund. While initially successful, the economic challenges of the early 1970s tested Bogle's resilience, and a personal health crisis added another layer of complexity. Bogle's determination to recover and lead Wellington through tumultuous times showcased his unwavering commitment to the company. The establishment of Vanguard marked a pivotal chapter in Bogle's career and in the history of the mutual fund industry. His vision for Vanguard was revolutionary, envisioning a mutual fund company that operated solely for the benefit of its shareholders. The real disruption, however, came with Bogle's next groundbreaking idea, the creation of the first index investment trust in 1976. Bogle's belief that most mutual funds fail to outperform the market average over time led to the inception of the index fund, designed to track the performance of the S&P 500. This move was met with skepticism and criticism from many in the finance industry, labeling it Bogle's folly. However, Bogle remained steadfast in his conviction that mirroring the market through an index fund was not only more efficient, but also more beneficial to the average investor in the long run. Despite the initial resistance, the index fund gained traction as investors began to recognize the benefits of low-cost, diversified investing. Vanguard's index fund gradually accumulated significant assets, reaching $100 million in the early 1980s. Bogle's index fund revolutionized the mutual fund industry, challenging the traditional active management approach and paving the way for a new era of investing. As the 1980s progressed, Vanguard, under John Bogle's leadership, continued to flourish and expand its influence in the mutual fund industry. The success of the index fund was just the beginning. Vanguard's commitment to low-cost, shareholder-first policies began to resonate more deeply with investors, distinguishing it from its competitors. Vanguard's rise was marked by its contrast to other industry giants, most notably Fidelity. Under the leadership of Ned Johnson, Fidelity had adopted a more traditional approach, focusing on active management and attempting to outperform the market. This strategy had its successes, but the increasingly apparent benefits of Bogle's index fund approach, lower costs and competitive returns over the long term, began to draw a stark comparison. The industry's landscape was changing, and Vanguard was at the forefront. Bogle's insistence on an investor-first approach was proving to be more than a noble principle. It was a successful business model. By the 1990s, Vanguard had solidified its position as a leader in the mutual fund industry. Its low-cost index funds had not only garnered a significant following, but had also started influencing how other funds structured their products and fees. The impact of Vanguard under Bogle's leadership was profound. It challenged long-held industry norms, offered a new path for individual investors, and reshaped the mutual fund landscape. Vanguard's growth was not just a corporate success story. It was a testament to the power of a vision that placed the interests of the average investor at its core. As the 20th century drew to a close, John Bogle's role at Vanguard began to evolve. After years of leading the company with his visionary approach, Bogle decided to step back, passing on the mantle of leadership. However, his influence on the company and the broader financial world remained profound and indelible. Bogle's retirement from active management at Vanguard did not mark the end of his impact on the financial industry. Instead, it offered him a new platform from which to advocate for the individual investor. He became a vocal critic of industry practices that he felt were detrimental to investors, such as high management fees and the pursuit of short-term gains at the expense of long-term stability. Bogle's legacy is multifaceted. He is remembered not only as the founder of Vanguard and the father of the index fund, but also as a champion of investor rights. His unwavering commitment to putting the interests of the investor first reshaped the mutual fund industry and democratized investing for millions of people. Bogle's influence extended beyond Vanguard. His ideas and principles have become fundamental tenets of personal finance and investing. The impact of John Bogle's work is seen in the continued growth and popularity of index funds, now a staple investment tool for individuals and institutions alike. His vision of a fairer, more transparent, and customer-centric financial industry continues to inspire new generations of investors and financial professionals. As we reflect on Bogle's legacy, it is clear that his contributions transcended the creation of a successful company. He altered the course of financial history, leaving a lasting imprint on how people save and invest. John Bogle's life and career stand as a testament to the power of conviction, the importance of integrity, and the profound impact one individual can have on an industry. As we reach the end of our exploration into the life and legacy of John Bogle, it's time to fulfill our promise, to share key investment insights drawn from his revolutionary approach and how they can be applied to your own financial strategies today. Bogle's biggest contribution to the world of finance was his advocacy for low-cost index funds. His philosophy teaches us the importance of minimizing investment costs. For the individual investor, this means choosing funds with low expense ratios, as these costs can significantly impact long-term investment returns. Finally, Bogle always puts the interests of the investor first. This principle should guide every financial decision you make. It's essential to understand the fees, risks, and long-term potential of any investment before committing your hard-earned money. We thank you for joining us on this journey through the life and lessons of John Bogle. Remember, the path to financial security doesn't require complex strategies. It can be navigated with the simple, honest, and straightforward principles championed by Bogle. As you move forward with your investment decisions, let these principles guide you toward achieving your financial goals.